YouTube! Two questions for today. Are we still in a bull market and what do we expect in the short and the long term? Let's get started straight away. New York, London, Tokyo, Sydney, Singapore, Los Angeles, Beijing, and New Delhi. This is the time. Let's get right into the video. Right now, the technical analysis indicate that there is what's called a descending broadening wedge, right? This particular person seems to believe that there is a breakout, but there are alternative scenarios as well. What are those two scenarios? That now we have broken out, so we're just gonna get straight to the moon, breaking above that $40,000 barrier. I think the barrier should really sit in a bit of a range, as I will show you in a minute, between the $40 to $41, $42,000 mark. If not, it'll probably test the bottom end of that wedge, and then it'll probably have to fight against that resistance formed by that descending broadening wedge at the upper end, and then it will have to break above that, which then stretches us out to that June period until we see that early June period, until we see that breaking out from this crazy channel that we're in at the moment. And yet another viewpoint on this move is that we need to see a higher high to confirm a local bottom and reclaiming that 40K, and then we can start talking about the sustained move back to that $50,000 mark. And that really is kind of my viewpoint, is that we are fighting against some of these resistance levels that were set by the previous market movements back in January. And so for us to then really break above that range would be key to then exploring those higher highs and getting to the freaking moon by the end of the year, at which I expect the price of Bitcoin to even exceed the maximum that we had back in the middle of April this year. But then again, another potential is that it can move down to the bottom of that descending broadening wedge, which by the way is a bullish signal overall, even though we test those lower lows. Now, the thing is, we still have to keep in mind how the whales are going to behave, still have to keep in mind how other factors, any kind of FUD or how many new people are going to join onto this Bitcoin trading as well, because they usually paper hand a lot more than whales do, as I'm about to show you. So do keep an eye on the market, and the best thing you can do is set up an action plan so that you average into the positions and use this as a buying opportunity. So having a look at yet another indicator is the MACD. So it's obviously at a crossover, but we need this crossover to be a lot more aggressive for us to see that increase that we saw in the previous crosses on the MACD. I really rate MACD. I like MACD. I think it's a pretty good indicator. If you want to get started on technical analysis, I think a MACD indicator is something that you should probably turn on your trading view so that you have that indication. I do the same over here, of course. So I encourage you guys to have a look at that MACD as well. So there's obviously multiple signals, and that's what we do with technical analysis. We look at multiple signals and multiple indicators, and then we formulate a probability as to what's going to happen in the short term. But overall, my strategy is to invest rather than trade, as much as I love to do that at the same time anyway, with the money that of course I can afford to lose. So if any of you are day traders out there and you're looking for that short-term gains, well, I wish you all the best of luck. But at the same time, please do your research and make sure you take calculated risks rather than just going YOLO. So now we've got the superimposed graph over where we are right now and what the market was back in 2017. And look, you can interpret it however you like, but I interpret this as a buying signal, and that this is probably not a bad opportunity. Even if it does dip a bit lower, then there is a double peak scenario that we do expect by the end of the year as well. Overall, it's really interesting to see that in this market, then what are the short-term holders, right? The noobs, right? And then the long-term holders, the pros, right? And then the miners, the quasi-pros, if you like, are doing in this current market. So really well put by Glassnode here in Twitter. Short-term holders are distributing, which means, you know, they're making all the big guys rich, right? That's distributing wealth to everybody. Very nice for them. Long-term holders are hodling or accumulating, and miners are accumulating. So look, you guys take the pick. Who do you want to be like? You know, like we can see that this purple graph is the accumulation behavior of short-term holding distribution. And then this is what the miners are doing, this orange line. And then this green line is what the long-term holders are doing. So your institutionals, people who know what the heck they're doing. So basically all of my subscribers, of course. And by the way, hey, there's a big chunk of you guys who came to the channel recently. Welcome to the channel. I hope you can learn something. And if you are learning something, go tell someone you love about this channel and make sure they subscribe to this channel as well. I'd love to build a strong community around the topic of cryptocurrency, finances, getting rich. What's up? So yeah, as you can see, that's how the market is being played at the moment. And you know what? I would probably do the same thing as the long-term holders are doing, rather than paper hand, you know, using the short terms. When the short-term holders are getting scared, right? And that's almost a bullish sign of it in itself as well. Okay, another noob news. Short-term investors sold more than 1.2 million Bitcoin at a loss. Oh, boo freaking who, right? According to data, 1.2 million BTC was sold between 5 to 25% losses. Around 120 BTC were sold at 25% loss or more. Okay, well, that's what the noobs are doing. What are the pros doing? Well, American BTC whales continue to buy the dip. Long-term BTC holders with between 10,000 to 100,000 BTC, so not little dudes at all, were observed to be buyers in the dip, mopping up around 120,000 Bitcoins. These buyers seem to be coming from USA, as evidenced by 3,000 BTC price premium on the largest US crypto exchanges, and exchanges in South Korea also saw 11% kimchi premium over the non-crypto exchanges, suggesting the dip is being actively bought by investors by these countries. Korea, my homeland, yes, the boys are smart there, the girls are smart there, that's good. Institutional investors were the most likely buyers, as daily over-the-counter transfers rose to a record high of 245 on Thursday, a 10-fold increase compared to a week ago. So guys, the big boys are moving in, and you want to behave like a big boy if you want to be a big boy. You feel me? You feel me? So with this in mind, we're going to have a look at how Bitcoin is behaving. And boom, 76.7% of Bitcoin supply is illiquid. Okay, what the hell does that mean? Illiquid means that it's locked up. Okay, it's not money that can just be, you know, turned into cash and pulled out so easily, meaning that they're most likely institutional investors. So strong hands, referring to investors who buy Bitcoin for holding purposes rather than speculations, is increasing in this dip in this market. And that's 76.7%. That is not a small chunk. That is 3/4 of the entire market. So it looks like the impact that the short-term holders are making onto the market is very little anyway, but they're distributing wealth to the big boys. So yay, thank you. Overall, in the Bitcoin market though, 46 million Americans now own Bitcoin as crypto goes mainstream. Now this is huge, guys. This is huge. The mass adoption, the market adoption is what we exactly need in this next cycle. And look, about 46 millions now own at least a share of Bitcoin. That equals to about 17% of adult population. 17%, guys. Keep that number in mind as we continue to read on. A survey conducted by the New York Digital Investment Group, about 75% of the respondents said they wanted to learn more about Bitcoin annuities and Bitcoin life insurance. That is absolutely amazing. A majority, 53%, said that they didn't own any digital assets, but 55% of those said they would consider adding cryptos to their portfolio, and so they should. So what do these numbers actually mean in terms of Bitcoin cryptocurrency as a whole? Okay, this is a report done by KPMG, yes, back in 2016, but it talks about how consumer adoption behavior works, how to predict the tipping point. And this tipping point applies to so many things. Like, it took 75 years, right? Telephone 75 years and radio 38 years. It was down to 13 years for the TV and 4 years just for the web. People marvel when Angry Birds Space hit the milestone in only 35 days and Pokemon Go did it in 10 days. And that is the tipping point that we need for everybody to actually hit the market with the product that we're putting out there. So at the moment, that product is cryptocurrency. Look, we looked at, this is the S-curve adoption model, and this applies to pretty much anything out there. The innovators, the early adopters, right? And they combine only into about 16%, and we've just come out of that there. And we're gonna hit that early majority. And that early majority is where we're gonna increase the fastest in terms of market share. As we tip over that 50% is where we're gonna get the next really big increase in the market share and adoption as well. So we're in this phase right here, guys, because we've just seen that 17% of American population, adult population, is now owning cryptocurrency. So having that in mind, we're in for a massive increase over the next few years. That cryptocurrency is gonna be never the same, and it's gonna be ubiquitous, much like the adoption of internet, much like the adoption of telephones, and much like the adoption of radio, all that thing that we've seen in the past. So what's actually happening in the cryptocurrency market? Well, we're seeing that the cryptocurrency market has increased by 10% in the last day, which is very, very significant. The volume is also increasing. Bitcoin dominance is decreasing at that healthy level at the moment. Now, it's really interesting to note at this stage that whilst the market cap has increased by 10%, Bitcoin only increased by 7%, but Ethereum increased by 14%. Now, and this is the beginning of the flippening, and we need to really pay attention to what flippening means. So when we talk about flippening, we're talking about the interaction between Bitcoin and Ethereum. So Ethereum price dips, but buyers are mopping up supply. So this is the most important part of the video, guys. So make sure you pay attention. More investors had been buying up Ethereum compared to Bitcoin since the start of May. Trading volume from Ethereum starting to surpass that of Bitcoin, a sign that investors are much more interested in Ethereum than in Bitcoin. This could set the stage for Ethereum to outperform Bitcoin, especially when most institutions have indicated, including Goldman Sachs, a performance in Ethereum over Bitcoin. Many experts are expecting Ethereum to flippen Bitcoin to become the most highly valued blockchain within the next 1 to 2 years. Guys, I don't doubt it for a second. Look at this graph right here. See that darker graph there and then the orange graph? See how that's overtaken the orange graph? Well, that orange graph is the volume for Bitcoin. That darker graph is the graph for the volume for Ethereum. So we're already seeing signs of that flippening happening. Now, don't just take my word for it. Let's go talk to this guy, Raoul Pal, who thinks that Cardano and other altcoins to massively outperform Ethereum. So there's going to be altcoins that are going to be flipping on Ethereum as well. Okay, well, let's have a look at the logic behind that. Macro guru and former Goldman Sachs executive Raoul Pal, who's clearly not an idiot, predicts Cardano and other altcoins will massively outperform Ethereum in a bullish environment. And listen to what he says. In traditional markets, once an established trend takes place, like Bitcoin, right, you move out the risk curve. In portfolio management, you have to have risky assets and non-risky assets so that you have a well-balanced portfolio, because the higher the risk, the better your return will be, and the lower the risk, the less the return will be. And the magic of balancing a portfolio comes into balancing your risk versus your gains. So for Bitcoin being like government bonds, you then go to Ethereum, which is like your corporate bonds, and then you got junk bonds, which is all the other stuff. He means the altcoins, and then private sector lending. So I'm moving out the risk curve because the trend is established, and I know that in a bull market, Ethereum will outperform Bitcoin and alts will outperform Ethereum, right? And that's totally the case. I've told you guys time and time again in my TikTok, in my lives, I say, guys, if you can invest in Bitcoin and Ethereum on the proviso that they will grow, if you want to increase your gains, then do move your risk out into the smaller cap coins like your XRP, your Cardano, like your VeChain, like your Chainlink, like your Pancake and Uniswap, like your Polygon, because those are the ones that are going to carry a little bit more risk, but overall, and when you combine them together collectively, will have a much higher return than your Ethereum and Bitcoin. I mean, just look at Bitcoin and Ethereum together. If Ethereum is going to eclipse, it's going to flip in Bitcoin, then by the end of the year or within about a year's time, Bitcoin, if it hits that 100K, then the Ethereum is going to 7x, while Bitcoin is only going to 3x up to that $100,000. So altcoin season means that as long as Bitcoin and Ethereum are showing strength, coins like ADA and Polkadot will outperform Ethereum. I just took a bet in a bunch of them, figuring out if there's an altcoin season, this stuff is going to up 5 times that of Ethereum. Powell's assertions are confirmed by Real Vision's most recent portfolio review, which shows significant allocations to both ADA, DOT, and other altcoins. So let's have a look at this. Okay, exchange crypto portfolio weights, bot crypto portfolio weights. Oh, interesting. So Ethereum obviously is more stable, so they gave that to the bot to trade. But the exchange crypto portfolio weights is probably what's gonna more apply to you and I. So it looks to me he's got a pretty well balanced portfolio. VeChain, well, that's really low in his portfolio. But look, I really like it. I like most of the coins that he is holding onto at the moment. And maybe this is something that you might want to replicate. But as you can see, he holds many coins. See how well balanced and well diversified his portfolio is. Make sure your portfolio is doing the same, guys. So let me know what you think about this portfolio down in the comments. Lastly, this is what we call the Flippening watch. We're gonna keep an eye on how Ethereum is playing compared to Bitcoin. As we can see in the Flippening, the market cap is only at 44%, but we're gonna get there, guys. 80% for the trading volume, and I think this is just for the last 24 hours. But in the last 2 months, obviously, Ethereum has already exceeded that of Bitcoin. We've seen the graph just before. Mining reward, where obviously Ethereum is doing a lot better. Okay, so just thought I'd define once again what the Flippening is, and this website does a really good job at doing that. It refers to a possible future event where Ethereum overtakes Bitcoin to become the most valuable cryptocurrency in terms of market capitalization. So look, we are halfway there, guys. So with that, I want to close the video. But look, thank you so much for tuning in today. I hope you learned something. To answer the first 2 questions from the beginning of the video, guys, nobody knows. There are short-term indicators, there are long-term indicators, but the thing is, I just keep my eye on the horizon. And that horizon isn't tomorrow, isn't next week. It's going to be a year, 2 years from now. So look, if you guys want to have peace when you're investing into cryptocurrency and you don't want to be fearful all the time, then follow the whales, right? Follow the guys who are treating this like a business activity. This is a business, they're not an emotional one. So you shouldn't be invested into graphs. You shouldn't be invested so deeply into the numbers. Like, you really just have to chill out. I see so many people losing their poo-poo over this freaking market. It's not worth that, guys. So make sure you have a long term in mind and just ease in, just average into these positions. And you know what? In years time, 2 years time, you will thank yourself. And you know what? You've done the right thing because you've come to my channel and you've checked out the information. That's gonna help you become a more informed trader than an emotional one. So thank you so much for tuning in today. I love you so much, guys. Make sure you go follow my TikTok, go subscribe to my channel, and I will see you next time.